Good morning, everybody, and I would like to extend a warm welcome to all of our guests here today at the CAC in Frankfurt, as well as our online listeners. I hope you all enjoyed the panel discussion and the fireside chat we had just now. And for this session, I look forward to providing you all with some valuable insights in terms of the key areas, points, and themes EU banks and brokers need to consider when implementing a digital asset services whilst taking into account both MiCA and DORA regulation. My name is Stuart Petersen, and I am the Chief Revenue Officer here at Wyden. We are a Swiss-based infrastructure provider of digital asset solutions, and we power some of the most well-known banking and brokerage institutions currently offering digital asset services across Switzerland, the EU, and globally. So without further ado, let's kick off by taking a look at where we are currently on our global journey with regulation. So, as we're here in the European Union, for those of us who are deep into digital assets, we all know that MiCA came into force at the end of December last year, but DORA also came in at the same time and actually has a massive impact on the ability for institutions to run digital asset services and achieve their MiCA licenses. As a market of nearly 500 million people, we hope that the advancement of MiCA is seen as a standard bearer for strong, sensible, and proactive regulatory implementation globally. And regulation is not just going on in the EU. As we've recently seen in the United States, the Genius Act, which provides regulatory clarity around the use of stablecoins for both issuers and the FIT 21 bill, which clarifies and divides responsibility of digital asset oversight between the CFTC and the SEC, passed the House of Representatives. And for those of you who were at the DAS conference in New York last week, there was a huge sense of optimism for the acceleration of digital asset regulation in 2025 to allow banks and brokers to start offering their services in the United States. However, it's not just about the US that we're seeing these regulatory announcements. In Turkey, we finally got, on the 13th of March, the long-awaited secondary regulation for a country of over 85 million people who are very active in crypto due to the economic dynamics there. We're also seeing other jurisdictions take active steps, like the UAE with a new VARA regulation that came out in October, Singapore, Brazil, and Hong Kong, to name a few. And the word on the street will be that the UK will regulate somewhere in Q1 2026. But now let's focus on the EU and look at the compliance requirements that are laid out for CASPs and what the implications are depending on the type of institution you are today and currently where you are in offering digital assets and products and services to your retail and institutional clients. So, first and foremost, it is essential to understand which services classify the need to be a CASP, and therefore what is needed for a crypto asset service provider license. If you want to provide custody and admin of crypto assets, for your clients, you need, you need to hold a CASP license. If you want to offer your clients the ability to buy, sell, or hold with you, you need to be a CASP. And if you want to offer any form of advisory services, you guessed it, you need to be a CASP. The regulatory landscape for crypto asset service providers has evolved significantly, now critically categorizing them as financial entities. This important shift brings CASPs under several key EU frameworks and regulations that govern the existing and established financial markets. For example, the Digital Operational Resilience Act, or DORA, emphasizes the need for robust operational resilience in the face of digital asset threats. Additionally, anti-money laundering and counter-financing of terrorism measures are critical for ensuring compliance and maintaining the integrity of the financial system. Other regulations, such as market abuse regulation and GDPR, further shape the stringent operational requirements that CASPs have to adopt. Finally, the mention of the FATF travel rule highlights the global effort made to enhance the transparency in crypto transactions. Overall, navigating this regulatory framework is crucial for the success of CASPs. Compliance with MiCA is therefore partially determined by the compliance with all of the other regulatory standards and frameworks. For example, failure to comply with DORA equals a failure to comply with MiCA. Now, depending on what type of institution you are today, will determine whether you need to apply for a CASP license or a MiCA license, which requires you to go through the whole MiCA application and approval process. Whether you just need to post your intention to comply with MiCA, and if there is no objection, you are deemed authorized. The three categories are therefore broken into newcomers, existing CASPs, and existing regulated institutions who want to expand their services into offering digital assets. A newcomer is an institution or organization that is not yet active in or existing in the crypto asset markets, and therefore they will need to apply for a full MiCA license. In terms, if I am an existing CASP provider, such as a company like Tradius, Deutsche Börse, Crypto Finance, or Bitpanda, I have to apply for my MiCA license, and luckily these guys have already done so. But an existing regulated institution like a bank or a broker does not need to apply for a MiCA license, as they fall under Article 60 of MiCA. This means that all they have to do is notify their competent authority at least 40 days before commencing the services, and if there is no objection within those 40 days, then the bank is deemed to have been authorized. So, there are clearly differences and advantages to being an existing regulated institution. So let's now look at what is Article 60 versus the need or having to apply for a full CASP license. The first point to understand is that if I fall under Article 60, then all I need to do is provide a notification of intent, whereas if I do not fall under Article 60, then I would need to go through the full CASP application process. This process states a minimum of 70-day procedure to apply for my MiCA license. But if all I have to do is provide a notification under Article 60, then I have a maximum of 40 days from that date of notification before I can start to offer my products and services. Under Article 60, I also do not have to wait for my license to be granted in my home country before offering those services across the whole of the European Union. And lastly, the overhead of ensuring that I have to prove to my domestic regulator that I'm fully compliant with DORA is actually removed, because Article 60 assumes that I've already complied with DORA as part of my existing business. So, to sum up, what are the main advantages for an existing EU-regulated institution who qualifies for Article 60 of the MiCA regulatory framework over an existing CASP or a newcomer who both have to apply for a full MiCA license? Firstly, Article 60 means a financial institution who qualifies for Article 60 does not need to apply for a MiCA license. They just need to notify their regulator 40 days before commencing their products or services. This gives them a huge reduction in time to market, and also a reduction in the additional compliance overheads and other regulations such as DORA, as they will already have assumed to have this in place, whereas a new or an existing CASP will have a minimum of 70 days, and crucially, they will need to demonstrate compliance with DORA and other prerequisites. Generally speaking, banks and brokers already have their long and existing and trusted brand relationships with their clients in place from the TradFi side. They will have an advantage over new and more unknown brands coming into the crypto native space. Banks also have had to comply for many years with all different types and sorts of regulation, and they have strong processes, procedures, and departments for regulation and compliance already in place to deal with the additional burden and overhead of MiCA. They will already have in place their compliance with DORA for their existing TradFi businesses, and will just need to extend to their digital asset business units. Now, it's not all going to be plain sailing for a TradFi bank and broker entering into this space, but all three pillars will have their own unique challenges. For newcomers, they will have to build out their infrastructure, fully apply for their MiCA license, prove compliance with DORA, and build market share to support their go-to-market investments. For transitioners, even though they have an existing business, brand, and market share, they will still have to go through a full MiCA license application process. This can take a minimum of 70 days, and most probably more, but they will have to comply with DORA and have their DORA compliance fully tested before any license is granted. For existing banks and brokers in the TradFi space, they come to market with the ability of using Article 60 and the 40-day notification process. But they do not have any existing systems, infrastructure, architecture in place that can handle the unique properties of both crypto and the way that crypto is traded, settled, custodied, and accounted. In addition, there is also a learning curve to understand and then build the optimal processes to manage risk, reward, capital, and to drive revenue and manage costs. Pre-trade and post-trade processes are also very different, as many institutions prefer to use multiple liquidity providers or execution venues to ensure compliance with both best execution for MiCA and also operational resilience covering both MiCA and DORA regulation. Banks and brokers therefore need to learn to deal with liquidity fragmentation and the complexity of managing post-trade settlement runs with multiple LPs with different processes and settlement cycles. So let's now take a deeper look into what this all means for regulated institutions. For banks and brokers, there are still a large number of operational barriers that they must overcome and build on top of to have that advantage of using Article 60 for MiCA and not having to go through the full MiCA application process, and also not having to prove DORA compliance as part of that 70-day application process. In terms of MiCA requirements, yes, best execution is similar to MiFID, but given the specific nature of liquidity fragmentation in crypto, there is still an operational overhead and learning curve to ensure that best execution is clear and determinable and also meets the operational resilience requirements that are stipulated by MiCA. As you see here, the requirements for transaction reporting are actually tougher than with MiFID, in such that you have to ensure a 30-second reporting cycle and not 1 minute as with MiFID. With DORA being all about having to have the systems, the processes and policies around operational resilience, banks and brokers need to feel comfortable that they have the adequate redundancy in place, either with a backup system provider or with their core provider having full failover multi-geo redundancy. As we know, crypto exchanges have been known to be fragile, especially in volatile markets. So ensuring that there is full redundancy if one of your LPs either goes down or cannot provide accurate and timely order books is vitally important. So banks and brokers need to ensure that their infrastructure stack is as automated and integrated as possible across seamless integration with core banking systems through to full failover management with multiple LPs and ensuring that custody and settlement is managed as part of the overall trading lifecycle. So, as we've pointed out during this presentation, best execution under MiFID is indeed comparable to what banks and brokers are used to with MiFID, but there are specific challenges in the crypto asset markets that have to be understood and supported. Although markets and liquidity providers are maturing and markets will coalesce over time, managing fragmented liquidity across multiple sources with a high variance in both transaction fees and costs means that best execution and taking into account price, cost, and the likelihood of execution is not the same as achieving that under MiFID. CASPs must take all necessary steps to obtain the best possible outcome for their clients when executing orders. And if we now turn to compliance with DORA, even though a bank or broker will use the notification process under Article 60, you still need to outline DORA provisions as part of the Article 60 notification process. It is assumed that these institutions will already have DORA processes in place from when the ruling commenced in January 2025, but a bank or broker still needs to ensure that it meets with the requirements of DORA and around operational resilience and management, as well as ICT risk management and incident reporting. And they need to ensure also that any third-party system providers also support the DORA requirements. Now, as I am from Wyden, I would like to spend a couple of minutes highlighting how our digital asset infrastructure technology supports a CASP both for their MiCA and their DORA needs. As we said, best execution is of paramount importance, yes, but it's not just about ensuring best execution is met. Firstly, our digital asset trade lifecycle technology helps a CASP meet its best execution needs through our smart order routing technology to select the optimal liquidity venues for a trade, even splitting that order into multiple lot level or child orders across different liquidity providers using our SAW splitting techniques. Our infrastructure ensures operational resilience and performance by design, and having high execution throughput, as well as management of counterparty rate limits and auto reconnection to always ensure an always-on performance. This, coupled with our ability to automate the complete trading life cycle across pre-trade, treasury and liquidity management, as well as post-trade settlement and double entry general ledger accounting and reconciliation, helps CASP maintain operational efficiency and excellence. However, to ensure we support our clients with their needs for DORA, our range of deployments from on-premise to SaaS managed services are fully geo-redundant with service level agreements and are optimized to meet the specific ICT risk needs from the largest bank to the smallest broker. Wyden sits as the beating heart of a CASP's digital asset infrastructure needs, ensuring that it does not just mean the functional and operational resilience needs, but acts as the orchestration layer, the gateway, the integration hub between all internal systems, as well as external custody systems and liquidity venues. And Wyden's ability to orchestrate and automate the complete trading life cycle from the point of order initiation. For example, if I was a retail customer wanting to buy 10,000 euros worth of Bitcoin, to the checking and locking of that customer available balance, to the best execution by the CASP across multiple liquidity venues, to the post-trade execution, confirmation, settlement, reconciliation, and accounting. So what about some key conclusions for today? Before we end, I would like to highlight some of these key points around MiCA and DORA with respect to what it means for EU banks and brokers. Firstly, regulation has generally been a positive revenue driver in financial markets, and MiCA is no different. It allows banks and brokers to unlock new revenue streams, not just in your home country, but all across the EU with passporting. Given Article 60 of MiCA only requires a bank or broker to give notice to their competent authority and be authorised within 40 days, allows a bank or broker to go to market without the burden of having to apply for a full MiCA licence and with no need to actually prove DORA compliance during the notification process. However, and importantly, DORA is expected to be in place under Article 60. And you need to confirm that compliance as part of the notification process. So if you are not DORA compliant, you can't be automatically MiCA compliant. So I'd like to thank everybody today for taking the time to attend this presentation. I hope that you found some good value in understanding some of the complexities and intricacies of MiCA and DORA and how Wyden can support your digital asset journey. We are here all day today, so please come by the stand just outside of the exit doors there and connect with us. And on this note, I wish you all a great day at the CAC in Frankfurt. Thank you.